Hello traders at CMC Markets. Welcome to a new update by RRG Research for Monday the 22nd of January. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. Let's kick off as usual with a look at the relative rotation graphs for some world indices. And I'm not sure if you have noticed, but trends are mixed across the world, I should say. And that's exactly what that RRG shows you. Got the weekly on the left and the daily on the right hand side. And the one that's really standing out is the HSI, is the Hong Kong, that's the Hang Seng Index in Hong Kong. That is on a strong relative downtrend on the weekly, and it's also in a strong relative downtrend on the daily. So there's no doubt about that. Hong Kong better be avoided. In the daily, you can see a strong outstanding tail for the Nikkei index, Japanese Nikkei index, and that is inside lagging on the weekly, but rotating up very rapidly. So we can take a look at that in a minute when we start looking at the individual charts. Now, the most interesting rotations, or at least what catches my eye, is the cluster of US markets that are really picking up again. And we're looking at the S&P 500 rotating back from weakening into lagging. We've got the Nasdaq rotating back from weakening into leading. The Nasdaq rotating back from weakening into leading. And here's the New York FANG index. That's leading the pack. Long tail furthest into the leading quadrant. And even the Dow Jones is picking up. In Europe, the DAX is doing quite all right, but when we start looking at the daily, it's a mixed bag. But the cluster of US markets moving in the same direction is promising for the US. So it looks from this perspective here that the US is picking up the lead again in terms of world stock markets. If we bring that to the daily RRG, then you see a similar move. We need to zoom in a little bit, but here you see New York FANG, you see S&P, and you see the Nasdaq. Dow Jones not so much. So I'm going to drop the Dow, but I'm going to look at the Nasdaq, the S&P, and the New York FANG because these tails are moving in sync. And if you want to see weeklies and dailies moving in the same direction, because it means that on 2 time frames the relative trends are moving in a similar direction. If we look for hedges on the other side, then it's very clear that the Hang Seng, which I already mentioned. But if you look at the daily, then here at least the FTSE seems to be moving straight into the lagging quadrant, and it's also already in lagging on the weekly with a little hiccup, but it's very clearly inside the lagging quadrant. So if you're looking for hedges, probably the Hang Seng and the FTSE are the best places to go to. We quickly move to the RRG that plots all these indices against 0%, which makes it a price performance comparison. Then you see a similar structure. Again, the Hang Seng moving rapidly out of favor. You see the FTSE moving straight into the lagging quadrant, still dropping on the RS momentum scale. And we see the cluster of US markets, S&P, Nasdaq, and New York FANG, moving into the leading quadrant. So that is promising there as well. Now, a few individual charts that I want to share with you. The first one being the S&P 500. I'm pretty sure everybody's looking at that one. That big red line here at the top, that's the level of the all-time high. So we are pushing against a heavy resistance area. It will be difficult to pass through because there's probably a lot of supply coming in at that level. But if you look at the relative strength, and that's what we just saw on that RRG, it's starting to pick up momentum again. So from a relative perspective, it's really good. And it's going to be interesting, exciting to see whether the market can push above that all-time high, because usually, normally, generally, a push to a new all-time high creates an acceleration in the move, an acceleration in the rally. So if and when the S&P 500 pushes above that all-time high, I think that we're in for a nice continuation of the current rally, which you can see here started back in October. We're now consolidating just below resistance. And if we push above resistance, then that unlocks a whole new world of upside potential. If we go to the Nasdaq, we see something similar, but the Nasdaq already traded above its all-time high, and it's doing it again. You see that I'm recording this on Friday morning, so this is Thursday's close, pushed above the previous all-time high, which is a good thing, is good news. So Nasdaq very likely to lead the S&P in case of a further rally. And if you look at the relative strength, you can see a very regular oscillation of relative strength, and it's moving back up again. It's starting to pick up relative strength again against the world index. We're comparing everything against the world index. And then finally the New York FANG, that did not break above its all-time high, but it's pushing very closely against it. And here also you see a pickup in terms of relative strength. So the New York FANG index needs to go above, that's going to be like 88.70, 88.80, something like that. If you break to new all-time highs, that'll be a good impulse for the New York FANG index as well. So for the US markets, S&P, Nasdaq, and New York FANG, all three looking very good. Nasdaq already breaking to new all-time highs. New York FANG and S&P still pushing against resistance. But if and when it breaks, it is very likely to cause an acceleration in the rally that we're currently seeing. Now on the other side of the spectrum, so here is the Nikkei index. Also, that one is way out, it's strong, and the reason why I'm not too fond of the Nikkei is because it has already run its course, or at least it looks as if it's already has run its course, and there is plenty of room for a pullback, for a setback, and that's usually not a good place to buy. So the Japanese Nikkei index, the Japanese market in general, is on my radar as being positive. Relative strength is outstanding. But from a price perspective, we just had a massive rally, and there is now plenty of room with a couple of big gaps for the Nikkei to come down. And then really on the other side of the spectrum, the Hang Seng, in a very strong downtrend already. We mentioned it here on these updates a couple of times before last year, that the Hang Seng was in really bad shape from a relative perspective. That has continued, and you can see how the acceleration took place when the market dropped below this previous low here. So that was somewhere in January, 15th of January. That happened a couple of days ago. And you can immediately see the decline, the acceleration in the decline. It's the same when you break out to the upside. You get an acceleration to the upside. When you break below support, you usually get an acceleration to the downside, and that's what's happening in the Hang Seng index. So from a relative perspective, there's not much to gain in the Hong Kong stock market. Neither is there from a price perspective. Not as bad, but not good either, is the UK FTSE index. You can see how we bounced off against that upper boundary of a trading range that's in place for the last couple of months, since May last year, so it's like 8-9 months. And we're on our way to the lower part of that range, of that trading range, and that's around 7,300. All in all, that doesn't bode well for the relative strength of the FTSE index. You can see how the RRG lines have rolled over and are now pushing lower, both below the 100 level. And when both lines are below 100 and moving lower, that means that it's pushing into the lagging quadrant, and that's what we saw on that relative rotation graph. Now let's dive into the components of the New York FANG index, heavily traded stocks in the US. Again, starting with the RRG, we got the weekly on the left, daily on the right, and it's quite spread out. And that means that there are some very good stocks inside the New York FANG, and there's some very bad stocks in the New York FANG. If I want to look for tails that are moving in a similar direction, in a similar shape. And what catches my eye here is, especially in the semiconductors type stuff, is like AMD is doing really well, and the one that everybody's watching is NVIDIA, and that's the green tail right here. And we know that a rotation from leading through weakening, and NVIDIA came from leading into weakening a while ago, and you can see how it is now rotating back up and making its way back to the leading quadrant. Obviously, that's following the break and the rapid rally after that, but the general picture for NVIDIA basically has unlocked a lot of new upside potential, and that's reflected on this RRG. And you can see that here on the daily as well, where you can see the tail of NVIDIA pushing deeper into the leading quadrant. Same thing goes for AMD. So AMD on the weekly is already inside the leading quadrant, and it has just picked up on the daily. So if you look at the rotation for AMD on the daily chart, you can see what I just showed you on NVIDIA on the weekly. You can see that on AMD on the daily. And with the weekly tail already well inside the leading quadrant, this is a new entry opportunity. This is giving you new confidence that a new leg of an already established relative uptrend is now starting for AMD. So AMD and NVIDIA are definitely worth our attention in terms of an individual chart. So where I'm looking to offset that, what's going the other direction, the first one that springs to mind here is Amazon. Amazon is coming from the leading quadrant in weakening and is now about to cross over into the lagging quadrant. When I go and look for the Amazon tail on the daily chart, it's the red one right here, and you can see how that has just day before yesterday, so Wednesday, Thursday, has literally reversed 180 degrees and is now pointing back towards the lagging quadrant. That's not a good sign, especially not in combination with that weekly tail pointing towards the lagging quadrant and moving towards the lagging quadrant as well. So we're going to take a look at that Amazon chart in a minute. Now the other one is Netflix. Netflix is inside leading but has rolled over here. You can see how that tail has rolled over and is now pointing lower, so it's rapidly starting to lose relative momentum. I'm going to look for the Netflix tail on the daily chart, and it's right there with Amazon. It's inside leading, but it's a very jiggly tail, and it's just reversed very rapidly, just like Amazon did. Not as sharp as Amazon, but it's definitely a reverse there. And it looks as if these tails, and now Netflix is going to accompany, to join or get back in sync with the direction of the tail on the weekly RRG, and that means lower. So that is going to go into a relative underperformance mood. So Netflix and Amazon are potential shorts because they are very likely to underperform the New York FANG index. Obviously, Apple is a big component, so let's have a quick look at the Apple chart. So here on the weekly, it's very clear that Apple is going into the lagging quadrant. It's inside lagging on the daily, but picking up not much, so it's not a very strong sign for Apple, not a very strong tail. And you can see why that is happening. I need to change this to the RRG line. So it's a very low RS ratio level. You can see a little bit of a double bottom being executed here, but there's overhead resistance waiting around 192, and then there's also the all-time high around 197, 198. So a lot of upside resistance for Apple, not a lot of upside potential, a lot of resistance, and the risk is clearly to the downside. And those of you who have paid attention, that Tesla tail here on the daily is not very promising. And if you look at the individual chart, you can see why Tesla is still in that free fall after breaking trendline support, after breaking horizontal support. I think we're going to see probably 190 in Tesla, and relative strength is pointing to lower levels, indicating a further underperformance for Tesla in the next couple of weeks. And then to finish it off, a quick look at the RRG for Forex, for currencies. And what we see here is a massive move of all these tails towards the southwestern part of the RRG, towards the lagging quadrant. Some are ahead of the game, others are lagging a little bit, so the yen is definitely leading the pack. The pound seems to be going the other way, that's interesting. And here's gold going the other way, so that is also interesting. But the majority of these tails are all moving towards the lagging quadrant. What this means is overall US dollar strength. That is what this kind of setup means. And if we look at the euro dollar chart, that's interesting because we were in this pretty big uptrend from September onwards. we were consolidating since this is the start of January, consolidating just above the lower boundary of that channel. And this looks to be a bearish flag pattern. And bearish flags are patterns that are very condensed, very tight, formed in a limited period of time of like 2 to 3 weeks. And I think this is kind of perfectly fits that bill. It's very condensed. You see all the bars overlapping, creating like a fully filled flag, which is really nice. And then a sharp decline lower, indicating the execution of the flag. And the technical rule is that you can measure the flag pull, and in this case that is from, let's say, 111 something to, let's be conservative here, 109. So that is about 2 cents and something. And then we can project that metric below or from the breakout point. So the breakout point is right here. That is 109.36. Take away 2 big handles, that brings us to 107.36. And that is exactly the level of the support that is formed by that November high and the December low. So the upward potential for euro dollar now very limited, probably towards trendline, old trendline support, now resistance, if we get there. And the downside risk, or the downside potential, if you want to trade it from the other side, is all the way down to 107.39. And that wraps up this update by RRG Research. Thank you for watching. I'm looking forward to seeing you again at a new update by RRG Research next week, same time, same place.